Well, if there's one interaction everybody really looks forward to and to understand both about what is happening in the markets, what's happening in Motilal Oswal Financial Services as a company, which way things are moving for the financial sector per se, and which way the economy and valuations are moving. Well, that one interaction is with Raamdeo Agrawal of Motilal Oswal Financial Services. It's always a delight to meet you in person, host you in our studio. Thank you for joining us. You're smiling, markets are up, profits are up, and congratulations, now you are a 1,000 crore quarterly profit company.
Yeah, I'm surprised by the result of our own company. You know, I was indicated that it will be about this number, but when actual number came out, 1,000 plus, I mean, last minute adjustment they do in terms of provisioning and all, so it turned out to be 1,021. I said, this is something. We clapped. I said, please clap for this result. So I think this is the power of tailwind in the industry and our execution, both. I mean, so operating profits are up 40-45%. Mark to market is also up by 40-50%, but that can be up and down. But what we have to focus on is the real first engine, that is the operating profit. That is very robust. Quarter on quarter it is building up. It is 40% up. All the businesses are firing up, whether it's broking, asset management, private equity, wealth management, iBanking, which was absolutely out of action for many years. You know, so for the last 1.5 years, even that engine is firing. We have 35 IPO mandates, and we are, I believe, we are #1 in QIPs in India. So I think revenue buildup is very good as the economy is progressing, and this 7-8% growth is on. I'm quite sure the capital markets will remain buoyant. Participation is increasing, retail participation. FIIs, which were sitting on the fence, I think they are also now finally saying event risk is gone, even budget is gone. Now they have to finally decide whether they want to come into India or they want to go away from India. My sense is they will come to India. Maybe not in a big way, but there will be net positive going forward. So then the activity shifts to a lot more capital market activity in terms of iBanking, wealth management. So those things will rocket big time. So I think a lot is happening in capital market, and it is a kind of revolution. I mean, when you pass through that phase, I'm feeling like what happened in IT in 90s, you know, late 90s, 97, 98, 2000, and then it started with $1 billion export, and now it is $250 billion export in 25 years. It has changed the entire country. I think this is even bigger than that. So inclusion of the entire retail into the, and well guarded, extremely well managed by SEBI and authorities out here, digital infrastructure. I think this is a story worth watching.
So when you say this is bigger than IT revolution lasted for a good 10 years before it was peaked out in terms of the TMT
And then of
bubble.
course it slows down.
Yeah.
You know?
So how far are we, where are we if you have to do a parallel with IT? Is this still the beginning of what could be called as the financial inclusion revolution?
It's just about 2-3 years right now. Okay. So fortunately it's linked to the size of the economy, because your saving, this is a savings pool getting transferred. See, your savings, even if see you are growing, the economy is growing at about 9.5% dollar year after for last 25 years. Okay, so there is no reason why we will not grow at 9.5% dollar going forward. It could be a little higher, but let's presume as good as bad of the past. So 9% the growth is there. So now we have the power of compounding is that base changes. So when the base changes from $1 trillion to $4 trillion, now you are growing on $4 trillion. So your savings are also growing. So last year we had savings about $1.3 trillion in the entire economy. But the financial savings of the households are about 20% of the GDP. And of that, only 5-6% is the pure financial savings. So of the household savings. So only 1 or 2% is going into the market. What stops of the larger GDP, or say a 5% shift to the capital market, which is not something impossible. So 10 years out, let's look at 10 years out, when my GDP is say $8 trillion, of that 5%. Yeah. So instead of getting 100 billion, we might get $400 billion in a year. You know, some 30-35 lakh crores. Right now we're getting about 8-9 lakh crores per annum. So that could go to about 400-500 lakh crores. So that is a possibility. Now it doesn't happen in straight line. There will be some corrections, there will be some slowdown or something like that. But I think the stories, and this will rewrite the corporate story of India. Corporate infra build of the country, the GDP of the country, and hence the savings and then the investment. So it has a huge what you call trickle down effect.
Okay. So the size of the pot, like investors always say, is big. But the competition is also increasing.
Yes.
Because of technology, because of also what is happening in terms of the P investors coming in. So business will grow, but could yields come down?
No. See, you have to see business by business. There are 6-7 segments in capital market, like exchanges. There is only one BSE, there is only one NSE, and now BSE is coming up to compete. But there is nothing else. You know, when we started in '87, the daily turnover was 200 crores per day. 200 crores per day, and it used to be T plus 15 settlement days, and it used to get settled T plus 21. Today, it is more than 400 lakh crores.
Yeah.
Okay, and it is T plus 1 settlement. So what I'm saying is, this is 2 lakh time growth of the market. Nothing has grown at this pace, and still it is growing at 50%. Still on this base also. So what I'm saying is, this is about the broking or transaction-based services. But look at the AMCs. We are at just about 40 lakh crores to the, total mutual fund is about 60 lakh crores to the entire nation. Your bank deposit base is about 200 lakh crores. So you are barely 30% of deposits. It should be 1-to-1. So as we go forward, this pie is going to grow. The equity side at least will keep growing at 25% compounded. So this 40 lakh crores, AUM, 10 years back it was 4 lakh crores. Today it is 40 lakh crores. Will it be 400 lakh crores?
It can be, logically.
Yeah. So the top 5 or 7 or maybe top 10 AMCs, they have 70-80% market share. So what I'm saying is, yes, there is a competition. There's no, it's not that if somebody doesn't do broking with you or doesn't manage, doesn't give you money to manage, there's no other option. So that's the beauty of it. We have very healthy competition, and nobody is eating, nobody is being challenged by anybody. It all depends on your competences, because there is so much of customers. You're getting 4 million customers every month.
You added 4 million customers?
No, not me, the system.
Okay.
Last
How many
month,
did you add?
No, ours is little lower. We must be adding maybe 50-60,000 customers every month, because we take only larger ticket customers because of our advisory and all. But yes, there also we are adding. But what I'm saying is, the system is going from 40 million demat accounts to 162 million. Last month was 4.2 million. So this is a nothing sort of revolution.
This is a multi-year trend.
Multi-year trend. It's a decadal trend. I think you will see 500 million customers from 150 million. In next 8-9 years, 500 million customers, and existing customers also putting more money. So this gives opportunity to the broking, it gives opportunity to asset management, it gives opportunity to wealth management, it gives opportunity in unlisted side. So everything just flowers.
So we've seen a rare combination of earnings surprise and liquidity surge. It's been a rare combination for the market in last couple of years. Earnings have been gradually upgraded, and flows have surprised everybody.
Yes.
What would be the driving factor next 2 to 3 years now?
It has to be earnings only.
Okay.
Because ultimately in the long run it is the weighing machine. So that's why it is very important to see this quarter is very challenged in terms of so far what earnings we are seeing. Because of maybe election time, government expenditure, maybe even the heat was too much. So I think the entire June quarter was combination of lot of bad negative macro factors came together, and on top of it you had the political, people were very intensely fought election. So and I think you're also not allowed to spend as a government. So now the new government has come, and now they have to do the expenditure of 12 months in 9 months kind of. So I think you'll see accelerated execution of projects. So I think the economy should pick up as we go forward. Monsoon has been fierce right now, and that will have a very good effect, at least in the second half, in the festival season and all. And hopefully the interest rates also come down somewhat, at least 50 basis point in next 6 months. So I think everything is pointing to pick up in the economy. But let's see, how it goes, because corporate earnings must come. Our research department is saying that next year it will be at least 14-15% Nifty EPS. From 1000 EPS in 2024, it is likely to be 1130. That's what they say. But at the beginning of the year and at the end of year, you know that.
But it is still not expensive. I mean, even
Yeah,
if, let's
if
say
that is so, then your
1100,
Nifty is not expensive at all.
Yeah.
I mean, at 2021 times for the India story, I don't think it is out of line.
let's start cutting across sectors. The leadership in the bull market right now lies with capex, PSUs, and some of those, so-called infra themes. Are they the clear winners in this bull market, and do you think that's the space which will continue to drive and surprise the market irrespective of the current valuations?
See, because of the shortage of supply of the quality stocks, and these are not to start with, they were small cap to mid caps. And today, because of the expansion in the multiple or even expansion in the earnings, they have become very large companies. So, will they keep up with the expectations? Some stocks are trading at, most of the stocks are trading at 40, 50, 60p multiple. So will they be able to match up with, say, at least half the growth? Say 30% sustained growth can they do? Generally, we have found that beyond 20%, very few companies are able to stack up for a long time. Even 5 years. 5 years, at least in the past, 5 years, 20-25% growth is also almost impossible. So some of these valuations are looking very lofty, and hence the sector churn has to happen. Wherever the excessive valuation is there, since the flow is coming, money has to find its way. So what will happen is, silently, the more expensive companies like Asian Paints, Titan, all these very heavily priced companies, they will have time correction, and the money will flow to the other companies which are freshly growing companies, and they are finding, they look to be relatively cheaper.
But is it time now to start looking at a business as sector which you always, in a sense, spoken about? Consumers, rural-facing companies, staples, because monsoon is good, government knows that rural spend needs to be picked up, and if consumption does not come back, there is a problem even at the macro level.
You can't become seriously large economy without, what for you are working at the end of it, if consumption is not happening.
So time to look at consumption stocks again, or consumer stocks again?
If you understand them well, well managed, and it is just a passing phase, I think this is a time to definitely build. But you have to have a lot of patience, because it could be quite frustrating if by chance things don't turn out for another 12 months and everything else moves up. So then you are still like somebody was saying, all the FIIs, what they did, they were sitting in HDFC Bank, and the water flew from other side. So they are feeling, they're actually allocated in India, but the India portfolio also, because of wrong selection, might have not done as well. So you have to be very careful how much you own of something which is more like a value, not so much of a growth.
So what is good and cheap in this market?
It is for the fund managers to figure out. You have to speak to our team for individual stocks. In any case, I am not at liberty to talk.
No, I'm not talking about stocks here, but like PSU stocks in 2020, they were cheap. They were not good, but they were cheap.
So, Nikunj, मेरे ख्याल से भी क्या, now you have to find relatively cheap stocks.
Okay.
Absolute cheap stocks जो हमारे era था, what we have seen in 40 years, 10p, 8p, 7, I think that era is over.
Okay.
So now, if the index is trading at 21, 22 times Nifty large cap, and mid caps are trading at 30, 35 times. So can I get a good mid cap at 20 times or 15 times? Because earlier, cheap mid caps means single digit P. Now cheap mid caps means 15, 17p. So that is a kind of a challenge now. It has to be relative. Absolutely cheap stocks are very rare to come by.
Can I say private banks are suffering not because of earnings but because of technical factors? Every time they go higher, FIIs are selling. They're good businesses to own, but there is selling. What can one do?
Both things are there, but if you are doing very well, why should even FI sell? And second is that there is enough domestic flow who will take it up. If you are growing at 30-40%, your deposit challenges are not there. Because what happens is when the large leader bank, basically, say like HDFC Bank, when HDFC Bank is, for whatever issues, which might be very specific to HDFC Bank, the merger, the transition, because of that, the leader remains low. It hurts the entire sector. I remember in 92, ACC had a problem because they brought the first million-ton plant in Wadi, and that didn't function for quite some time. It hurt the EPS of ACC. But if the ACC is available cheap, then the entire sector also remains cheap. So I think right now this merger process gets resolved or subsumed and normal earnings start getting start functioning, the bank start functioning as a merged entity starting from September this, I think next quarter is the last quarter as a kind of a year-on-year comparison. I think the first quarter year-on-year comparison will start from September and then the journey starts. So I think we could be at the bottom of private sector because if the private sector banks don't fly, how far we'll go as an economy?
Warren Buffett made a late bet in his late 70s, early 80s actually in Apple, which is the largest part of his portfolio. And that in a sense has become his most famous bet in last 15 years. In his early 60s, what could be that bet for Raamdeo Agrawal? देखो बफेट साहब का नाम लिया अब तो बताना ही पड़ेगा आपको.
नहीं, see, the point is that as I said, my bet is all my own products,
Yeah.
And one or two stocks which I own personally, which I see now. One of the things is that I want to buy stocks only forever. Okay. I definitely, after, but I don't want to do from zero date. Once the company becomes of some size, say 10-15,000 crores turnover, maybe 500 crores, so I don't have to test whether he's good or bad, his business model is right or not. So once that is tested, if I like the guy and I like the business, I want to buy small chunks forever types. And the inspiration came from AU Bank, we bought it, say at 1,400 crore valuation I bought, and I'm still holding. And now it is 45,000 crores market cap. Whatever be the short-term challenges of the sector or the bank or whatever, the journey is long, very long. So you have to sit through. For 3-4 years, we have not made any money out of that when the market is just booming. But this is the patience you have to see. I think I have a patience now. I have a lot of patient capital. So I can sit in a business which is a fantastic long term, but very challenging short term. And that's the spot where you'll get good quality business at reasonable price.
So higher uncertainty and higher margin of safety. That combination you look at. When there's uncertainty, you get good value, and that's the time you want to buy.
Yeah, so I want to test. I want to buy tested, good business run by good management, but today passing through some headwind, because good businesses also have a headwind. I have seen enough headwind in my business. Today it is tailwinded, but there are headwind, and headwind is punished by the market big time. Today deposits are moving away from banks to capital market. There is a challenge for the, it's there in the FM interview, it is there in the RBI interview, everywhere. It's a big subject. I don't know how they will pass through this, but this transition is real. So you see what is happening on the capital market side and what is happening on the banking side. So, but then these are all passing phase. India has, the nation has to find a way, enough credit, enough liquidity has to be there for the banks to lend to the corporate world. Otherwise, just the equity is not going to solve the problem. So you have to have a longer term understanding of the business and the management. More importantly, management, because in the longer run, businesses remain good, but if the management jockey is not good, then also there is a problem. So I think when the combination of good business and good management come, then you can sit long term. So I think, and India is one story. See, India is a compounded story. One of the beauty of India is that I have seen 40 years of India. What have we not seen? Forex crisis, Kargil crisis, atomic bomb crisis, Y2K crisis, सब कुछ देख लिया हमने. Coalition government, 30 years of coalition government. तो the political crisis देख लिया, social crisis देख लिया, military crisis देख लिया, famine देख लिया, flood देख लिया. अब यहाँ पर you have $650 billion of reserve. Every week you are getting $6-7 billion. World is looking at India as one of the fastest growing economy, large economy, and the base is there now. See, for everything you need a base, and now we have with $4-5 trillion of economy, $5 trillion of capitalization, we are there now. Nobody can ignore us. Even China someday has to accept that they are honorable neighbor rather than doing masti with them. So I think everything is going good. So India's story is compounded story. Past has been compounded. There is no reason why the future will not be compounded. And in that future compounded story, you have a lot of businesses which are compounded, and within them, the good managements, they will have a compounded story.
One of, at least I know this is one of my favorite lines of Warren Buffett, that there are two rules of investing in stock market. Rule number 1, never lose money. Rule number 2, never forget rule number 1. We are sitting at that level of the market where everybody in a sense has been rewarded if you've participated in the
Handsomely.
stock market in
Yeah.
last 2-3 years, whether it's large cap, small cap, or mid cap. Do you think at this level one should take some cash off the table? Do you think it is time to check the asset allocation, or one should simply focus on the next 2-3 year window where you think markets will continue to reward and delight us?
See, Nikunj, I can't speak for others. I can speak for what has brought me this far. What has brought me this far is don't time the market, at least the Indian market.
So always remain
आप
fully
जितना time
invested.
करोगे ना, I'm telling you, you decide that today it is looking like a very frothy, very high. आप 10-15% cash में बैठ जाओ. The market just takes off. You look at how big is it? See, election result was not a small event. Huge setback for the this thing, ruling party. And yet the market closed hardly a percentage or two lower, and in next 24 hours it was higher than that.
Yeah.
The guys who sold for first 2 days, they are still nursing their wound. The stocks which they sold, they are up 15-20%. So उसी कारण से क्या होता है? See, in timing the market, what happens is that yes, you could be right now, but then your assumption is that at the bottom you will be able to buy it, and then again it goes up, again you will be able to sell. So this actually, at least I am not competent. Neither I have time, nor energy, nor competence. So I just don't attempt that. I go all the way up, right till whatever is the last. Okay. Of course, if you stand for the top, you also have to face the entire flag of correction.
So we've always spoken about buy and hold. Buy,
That
right,
has worked
sit
for me.
tight.
See, I have a parallel income, mind you. I'm not dependent on my investment income. It is just a, fun for me. Because I have a running company which earns a lot of money. So I have my dividends and all coming in. So I'm not, see, everybody is not that blessed in terms of fixed income. So they must have some fixed income if they are so insecure about equity investing. But say, whatever makes you enough money for your monthly expenditure or whatever contingencies. But beyond that, you should be only in Indian equities, because wealth creation is about earning returns higher than inflation.
Yes.
Post
It's buying future purchasing power.
Post tax.
Yes, yes.
So आपका ये बताइए मेरे को कौन सा फिक्स्ड इनकम जो है पोस्ट टैक्स आपको हायर देन इन्फ्लेशन देता है? Inflation 5-6% है, that is all post tax. Your earnings is also post tax, so there is no return. So even if it is 1% high, 1% high was 70%. It will take 72 years for your purchasing power to actually double. Okay. Whereas if you earn 15%, in 7 to 8 years your true purchasing power will double.
Yeah.
So
Rule of
I
72.
think, so I think we have to be cognizant of that. Either you want to double your money nominally also in 5 years or 15 years. If you go to debt, it will double in 15 years. If you come to the stocks, it will double in 5 years. And that has happened in the last 40 years. Why will it not happen in the next 40 years? So that's my faith, optimism on Indian story. And I don't think anything is changing there. So you have to remain allocated.
So I'll wrap to the last 2-3 questions, but I want to summarize this point of yours that while we can all point to points of excesses in the market, we can point to euphoria in the market, we can use the word bubble and we can use the word trouble. Your view is that for a long-term investor, don't be swayed by these short-term ripples and noises which are getting created. Stay fully invested, because the framework of the long-term, which is low interest rates, entrepreneurship, attractive valuations, Indian financial sector is growing, they are intact. So if you can digest 10, 15, 20%
you should also
volatility.
have stomach to see correction.
Okay.
See, इतना लंबा चला 8,000 का जो पोस्ट कोविड लो था, वहाँ से आपको 24,000 हो गया. So 3 times तो हो गया. और सबको 3 times index, 4 to 5 times for actual portfolios minimum. Okay, that is a result. Now with that, with so much of profit sitting on your portfolio, you should actually wish that let it stop for some time and let it correct by 5-10%. You can't be getting just the top and then you sell and then again, because there is so much happening in the economy. Now this monsoon is on. It's not small. The monsoon just, the rural economy blooms, and if by chance oil corrects by $5-10, it's already at 80. So a lot is happening, and government is also very proactive. This budget is half the budget. If you ask me, only there are direct taxes. Where are the indirect taxes? The reliefs which are to expected from the other side, if they want to give any boost to the consumption, they have to rationalize that the GST rates on those goods and services. Otherwise, if there is no consumer economy, how far will you go? Then what will happen is the total tax collection will, if the consumption doesn't, GST will start falling off. Last month was bad. Let's see what happens for July. So I think the GST is already slowing down. But the evidence will be known as we go forward. And the moment GST machine starts slowing down, government will definitely become proactive.
So last two questions. The P multiple for Indian markets got re-rated when corporate tax rate came down. Suddenly corporates were, they had to pay less taxes. The P multiple for equity or for retail investor was always beneficial. Why? Because tax rates were low. Now tax rates have gone higher, which in a sense will have impact. Capital gain taxes, right? Could that have an impact on flows, P multiples, and other basic parameters for equity in India?
You see, you have to understand two things. Difference between capital gains and capital gains tax.
Okay.
First comes the capital gains, which is not impacted by your capital gains tax.
Yes.
See, the driver of capital gains is the corporate earnings, interest rates, corporate earnings, fundamentally corporate earnings growth, and at the margin interest rate. If your low interest is there, if it is 5%, then 20 P multiple becomes the base rate, If the debt multiple is 20, so the equity has to be with the growth higher at least. So what I'm saying is that if your corporate earnings are intact, in that case you are fine. So what was your question? I forgot.
No, my question is that if the tax rates they go higher, could that have an impact on the multiples?
So obviously you are getting less.
Yeah, exactly.
I mean, if I was getting 90 bucks back, 100 rupees gain, 10 rupees tax, and I was getting 90. But first important thing is there is a 100 rupees gain. That is not impacted by how much is taken away by government. And that too after only I sell. If I don't sell, there is no incidence of tax. So when I sell, I get 2 rupees less. So government has increased the pie of what they take from us. But the gains are not impacted. So in fact, they are trying to, this money will be spent in the economy in such a way that actually economic boom should happen. And that should give impetus to the corporate earnings. So I hope what 2-3% extra tax they are taking, that will be made up more in the corporate earnings. It should, I'm just being greedy. I'm thinking that the way government will spend the money back into the economy, that will increase the corporate earnings by 2-3%.
And that's a fantastic point. So I'll just wrap up today's interaction. First, congratulations once again on 1,000 crore quarterly profit. Touch wood. I've had the pleasure of tracking Motilal Oswal Financial Services. The quarterly profit used to be in double digit.
Yes.
Moved to triple digit.
Yeah.
4 digit. Hopefully 5 digit very soon. Yeah. That's what I think, we all will wish and hope for.
We are not that greedy. It will take time. It will take its own 25% compounding. So it will take 8-10 years for digit to change.
Okay. So, well, why not?
Yeah.
Plan karenge to hoga.
Yeah. It's all planned.
Okay. Second, market. Your view is that rather than timing the market, spend time in the market for long-term investors, continue to stay and invested, but also prepare for volatility and maybe a correction which cannot be ruled out.
Very healthy correction. See, correction is different from crash. We are not in a valuation or in a zone where it can crash. Something happens globally, if Nasdaq or something comes down by 50-60%, there is a run on the equity market. That's a different thing altogether. And risk can come from anywhere. But I think one should always be ready for a healthy correction.
Third, financials or anything related to do with financial markets, whether it is brokerage, AMC, whether it is banks. Abhi to picture shuru hui hai. This is a multi-year bull run according to you, and what we are looking right now is just the tip of the iceberg. There's a long way to go for companies which are associated directly and indirectly with financial services.
Yes, I think financial sector will be one of the, any sector grows, financial sector benefits.
Okay. And monsoons are great. Chhate bahar aa chuke hain. Legs bharne lagi hai, which means that we could be in for a surprise, and the second half for the economy could be better than the first half, considering government will spend more and monsoons are decent.
Yes, I think so. I'm just hope I keep my finger crossed. After seeing very subdued first quarter result, my real fear is what happens in the rest of the year.
अच्छी बताइए 60 साल के ऊपर एक भी सफेद बाल नहीं, ये कैसे हुआ? ये सीक्रेट तो बतानी पड़ेगी.
नहीं तो मतलब it's all beautification of hair.
Stay happy, do what you like, spend what you like. It's the HQ what you're working on. Happiness
actually, it is to do with the passion for what you love, and you do what you love. And it is, it's not that designed, so to say. When I look back, if I had taken a job in some corporate instead of coming to the stock market, I would have been rotting somewhere, or maybe on the retirement age, grey haired somewhere. So it all depends on being lucky to pursue what you love.
Everybody knows Warren Buffett is your hero, your mentor, somebody you looked up to. उसके अलावा कौन? एक तो और बता दीजिए.
अभी नया अभी पैशन है चक फिनी.
अच्छा.
Chuck Finney, see, even Buffett's guru is for giving. See, one is earning and second is giving.
Yeah.
For giving, Chuck Finney is Bap. He's amazing. So, Chuck Finney has, he was a multi-billionaire. Yeah. The guy who started duty-free shop all over the world. Yeah. That guy donated every single penny.
99.9% is what I
so
heard.
that's what, that's the inspiration. It takes a lot more courage to give. So at least my sense is he's my guru, second guru for earning Buffett and giving Chuck.
आपने आज हमें टाइम भी दिया, वो भी चैरिटेबल है. थैंक यू वेरी मच फॉर जॉइनिंग अस एंड विद दैट इट्स बैक टू द स्टूडियो.
If you like this video, then like, share and subscribe to ET Now.